It's Monday, the 4th of September. We welcome our viewers here in Nigeria and around the world. I am Bosin Amafaye on the show. Now, a very busy business week starts here tomorrow, Tuesday, with the much-awaited GDP report as the markets are reopened from the long weekend Muslim holiday. The key economic report is our top of the week here on Business Morning and on Channels Television, Nigeria's news leader. Now, take a look at our lineup of top guests we've selected for tomorrow's morning show here on Tuesday. That's tomorrow, Tuesday, at 10 o'clock in the morning. Yemi Kale is the Statistician General of the National Bureau of Statistics. We expect him to talk to us in the morning at this time tomorrow, 24 hours from now, when the GDP numbers are released. Well, he'll be live from our Abuja studios. And also on the lineup is Bismarck Rwane, economist and chief executive officer at Financial Derivatives Company. And he was bringing some macroeconomic perspectives to the GDP numbers. And of course, Johnson Chukwu, who is the head of trading and chief executive officer at Cowrie Assets Management, is taking us through the investments perspectives of the second quarter GDP numbers, of course, with a bit of an outlook from our team of analysts. And then on Tuesday at 10 o'clock in the morning, Emmanuel Okeje, who is the special assistant to the central bank governor, Godwin Emefiele, will be live in the studios with us on Monetary Authority's look back and look forward on the GDP numbers. So those are the top. Of course, our regular team of analysts would dissect the markets on the GDP throughout the rest of the four-day trading week. Tomorrow is also very important because South Africa will also be releasing its quarterly GDP numbers. Two of Africa's top economies, according to a Bloomberg report over the weekend, says they will be maybe out of recession. So we're taking a first look at Nigeria. Then, of course, we're going to squeeze in South Africa's GDP numbers as well to see where the two biggest economies on the continent are headed. So you don't want to miss this week, starting from tomorrow, and those analysts that we've lined up for you. Meantime, this is the last report on the state of the Nigerian economy on the street just before the long holiday. That's the Fitch ratings, says it's affirming its long-term sovereign currency issuer default rating, what they call the IDR, at a B+ for Nigeria, but with a negative outlook. And according to this report out on Friday, the negative outlook reflects the downside risks to the rising Nigerian government's indebtedness, the possibility of the reversal of the FX liquidity. We've seen the central bank pump about $1.2 billion into the markets in the month of August alone, and of course the yet fragile economy. That seems to be speaking to what the MPC says in their last July meeting, communique read by Godwin Emefiele. So that's one thing those are part of the discussions tomorrow when we have the GDP second quarter. But what's the forecast from Fitch Ratings for 2017 as a whole? Whatever the numbers came out with tomorrow, GDP by Fitch Ratings, Nigeria is expected to roll out 1.5% this year and 2.6% in 2018 on the back of increased FX availability to non-oil economy. You've seen the central bank pumping a lot of dollars into non-oil economy, including agriculture, as well as the Buhari's administration expected fiscal stimulus to ramp up the economic recovery. According to Fitch Ratings, those factors should drive Nigeria's GDP to 1.5% positive for 2017. We're just about 4 months left in the year. Meantime, the current account surplus for Nigeria is seen at about 1% of GDP this year. Meantime, exports is forecast to top 30% in 2017 and another 10% in 2018. Imports, according to this Fitch report, is expected to rise on the dollar availability and the recovery of the non-oil economy. And a line there for the FX market, the I&E window, what you call the investors and exporters market, should now be considered as, quote, relevant exchange rates, although the market, according to Fitch Ratings, is far from fully transparent. What's on the calendar for this month? Of course, the GDP is king this week. And then, of course, when we roll out from next week, we will now be looking at the August inflation report. Then once we digest that, we'll now be looking at the Central Bank Monetary Policy meeting for September the 2nd to the last meeting in 2017. What will the committee decide? And after that, we're looking at the fixed income market. The last debt management Naira bond was nearly in the water. That offer was hugely undersubscribed. 135 billion was what the DMO asked for from investors, got only about 53 billion naira, one of the most disappointing. And we'll talk about that in the next couple of minutes here on the program, so do stick around for that. Then we have the raft of right issues by listed companies. The number of companies listed on the stock exchange asking for more money from shareholders are increasing by the day. At the moment, we have about a dozen of them already rolling out several billions of nairas in rights offering. Then you don't want to miss the Stock Exchange Annual General Meeting this month. It's likely going to be the last one if the demutualization process is finally approved. So the Stock Exchange will elect new dealing members and individuals as members of the council and also present to the members the progress report on the plans to go public. It's called demutualization. And of course, from Abuja, we're expecting the Ministry of Finance and Budget and National Planning, two ministries, to update the rest of us on the state of the ERGP, the Budget 2017 implementation, and the preparations timelines for the Budget 2018, that we have an executive order for the first time in history to get it right through the National Assembly and the executive and be ready, fresh and hot on the 1st of January 2018. And of course, we'll be welcoming back the legislators from the upper and the lower houses. What would they be up to when they resume? We'll be looking at that also in the next couple of days. And of course, in case we forget, schools will resume as well. So we expect a bit of vehicular gridlock in Lagos when the schools reopened. And for those of you who have some kids in school, I hope you're keeping some money aside to pay school fees. Okay, what are the best performing stocks in the Nigeria